back to Market on Close. It's time for Options Corner. We're joined now by Rick Ducat, our lead market technician. Now, Rick, you've got your eye on SLB ahead of their earnings tomorrow, and obviously the energy sector as well.
Yeah, financials were the big focus this week in earnings season here, but energy has been a noteworthy sector for much of the year here. We've seen quite a bit of big pieces of news, such as, major conflict situations in areas that are key for oil production, Israel, Iran, Ukraine, etc. But also just the general situation, our ever-growing hunger for energy keeps coming back into prominence, mainly because of AI. AI takes a lot of energy. Doesn't seem like that's a field that's going to slow down anytime soon to me either. So it brings all kinds of questions to mind too, as well about other sources of energy, wind, solar, nuclear. How does that fit into our administration's energy policies right now? It's kind of not super clear here. But today we'll focus mostly on the oil and gas sector, the kind of conventional energy sector. And if we look up our first chart here, we can see that unfortunately for the bulls, this is a sector that stands out because it's one of the lower performers of the S&P 500 categories. XLE, the energy ETF, is down like 0.5% year to date, while the SPX is up more than 7%. And you can see here on this chart, as with all sectors, there's winners and losers. Our red line, MLPX, that's energy infrastructure, storage, and transportation. That's the only one that's doing better than the broader market. So that's like Kinder Morgan, a company like that. Then we have CRAK, oil refiners, petroleum, natural gas. So like Valero, Marathon, that kind of company. Then the sector itself, all the way down at the bottom, OIH, oil services like equipment, infrastructure, technology, just like our company here today, SLB, also Halliburton. So that's the area that's doing the worst here. But if we were to look at our XLE chart more specifically, we can see price has been bouncing off of those April lows, for the most part traveling within that upward sloping channel between our two white dashed lines. But some trouble, I would say, because it seems like price got rejected at our volume profile point of control. We topped out twice, right around that $89-$90 area there. And then it's seeming like for now, hanging on near the lower end of that channel here, while momentum continues to decline.
And as we look specifically at SLB, ahead of their earnings, they missed on EPS last quarter. They had some weak drilling activity in Mexico and offshore in Africa. And it looks like they've had quite a few downward revisions from several different analysts, no upward revisions at all in the past 30 days. So, what's the expectation for them here?
Well, to me, too, the interesting story about SLB, I've always been glad they changed their name from Schlumberger. I find that word very hard to say. But SLB acquired Champion X, which is ticker CHX. This is a Canadian company that supplies oil field services and equipment, a $7.7 billion deal. And, they faced some regulatory hurdles, but it's seeming like now they were able to clear this deal here. So that's what's been going on specifically for them that caught my eye. When we do look specifically at our SLB chart, though, another one that's kind of struggling. We're near the lower end, not too much progress off of those April lows here. Key volume areas near 34 and 36 here to kind of give us some temporary boundaries for price, but really never even come close to filling those gaps we formed all the way back up starting near 41, or even really made our way close to that point at all. The best we could do was 38.15, our red line there, which represented a low point from previously. For now, not really doing much to the upside here.
Yeah, and as far as options activity goes on SLB, and I am also happy they changed their name, Rick, as well. What are you seeing? Are we heavy on calls or puts here?
So today, quite skewed toward calls in terms of the options volume. 34.8 thousand contracts traded. Not the biggest numbers here, a bit above average for this name, but roughly 2/3 calls. In terms of open interest, July expiration, tomorrow's expiration, still has about a 2.4 potential expected move here. So there's some possibility for some fluctuations here. 31,000 calls, 19,000 puts for open interest here. In terms of the range of the calls. 35 to 40 is where most of the activity is, but that 35 level is the highest by far in terms of the open interest. In terms of the puts, that's our expected move there, by the way. And on the put side, 30 to 37 is the range, but the highest, once again, that 35 level. So really an important level. That's where our green line is on that chart. That's where most of the options activity is for tomorrow's expiration.
Yeah, I mean, and certainly not far off from where we are right now, trading at 34.67 right now, coming into earnings. As far as any notable trades, were there any for SLB today?
The biggest quantity trading was in the July 18th, August 15th contracts here. It was a spread that was done. It looks like it was a 35 strike call, like if it were an opening trade, it would be a call calendar at an 80-cent debit. So like a $200,000 debit total, but not really clear if it's an opening or closing trade or if it's some kind of rolling trade. Either way, it was short the July 18th calls, long the August 15th calls.
Well, Rick, we appreciate it. We'll get their earnings tomorrow morning at 9:30 Eastern, but thanks for breaking that down for us. That's Rick Ducat, our lead market technician here for the Schwab Network.